Hi, this is Lara at Elliott Wave Stock Market with an extra video update for you after the session for Tuesday the 5th of December has closed. For the very short term, we're now looking for a pullback either to about 2624 or 2599. But if price does make a new low below 2557.46, that would be reasonably bearish. It would indicate that a multi-week correction or pullback has arrived, and I'll be expecting it maybe to last about 10 weeks, but it could be longer. It could be a Fibonacci 13 or possibly even 21 weeks. Let's take a look at the Elliott Wave analysis first, and then we'll look at classic analysis and see how much support or lack thereof there is for this Elliott Wave analysis. My analysis sees a big supercycle fourth wave combination over here, and this is where a cycle degree fourth wave is over here, and a cycle degree fifth wave begins here. The fifth wave may only subdivide either as an impulse or an ending diagonal, and at this stage it's pretty obviously not a diagonal, it's a simple impulse. It started out with 1 2 1 2, so we need to see 3 4 3 4 5 to complete. What that means is, along the way up toward this final target, I will be expecting two big multi-week corrections to be reasonably in proportion to this second wave and this second wave. This second wave here lasted 11 weeks, and this second wave lasted 10 weeks. It is the proportion between second and fourth waves within an impulse that give a wave count what we call the right look. Think of it another way. If we have a time-consuming second wave like this here, which lasted 11 weeks, and then the next that's corresponding fourth wave, is much more brief, say it were to only last 2 or 3 weeks, then the whole structure for primary 3 would have a 3-wave look to it, because the second wave would be so much more time-consuming. That would not have the right look. But if the fourth wave is about even in duration with its counterpart second wave, then at higher time frames the wave count has what we call the right look. It would look like a 5-wave structure, and so that's why I am expecting the upcoming fourth waves to last about 10 weeks, possibly even a Fibonacci 13 weeks in total. At this stage, if intermediate 4 has arrived, and there is a possibility, it may not move into wave 1 price territory below 2193.81. I'm drawing this best fit channel around intermediate wave 3 from this low to this low with a parallel copy on this high. I'm giving these price points so that members may replicate the channel. At a midline, the midline is about where upward movement is finding resistance at this stage. The target now for cycle wave 5 is to reach 1.618, the length of cycle wave 1. A prior target was for cycle 5 to reach the more common equality in length with cycle 1. That was at the round number pivot of 2,500, but price just keeps on going up past that number and the structure is incomplete, so I've used the next Fibonacci ratio in the sequence to calculate the next target. I'm going to continue to approach target calculation in this methodical and logical way, so if we get up to 2926 or pretty close to it, and again the structure is incomplete or price just keeps on going up through this target, then I will use the next Fibonacci ratio in the sequence of 2.618, but we are not there yet. So I don't want to give a whole list of targets, I just want us to focus on the next price point that might be where this upward movement ends. Along the way up, if we're going to have two big multi-week corrections, one for intermediate 4 and another one after that coming up for primary wave 4, then the whole structure to complete cycle wave 5 is probably going to take at least another 6 months. I would be looking for at least, at the absolute bare minimum, 4 more months of overall upward movement with those two corrections along the way, at least 4 more months to complete the structure so that we can see some divergence between price and market breadth at the final high. With absolutely zero divergence at this stage with price and breadth, I do not think this market is ready to end this bull run. Let's take a look now at the daily chart, where we're going to focus on the end of intermediate wave 3, where this low for minute wave 4 was this point down here, and here's the end of minor wave 3, quick double zigzag for minor wave 4, and now minor wave 5 may be extending. This could be just minute wave 1, and now we're looking for a zigzag probably downward for minute wave 2, which may not move beyond the start of 1 below 2557.45. The target for minor wave 5 assumes the most common Fibonacci ratio for it, equality in length with minor wave 1. That would be achieved about 2773. Let's take a look at the first hourly chart where minor wave 4 is this low down here, is just off to the left of the chart now. I've drawn an Elliott wave channel around this upward movement. If this is minute wave 1, then minute wave 2 should break out below the lower edge of this Elliott channel upon its conclusion. If it reaches down to the 0.618 Fibonacci ratio, which is about just under 2599, then it would do so. It would break out of that channel if it does so quickly enough, that is. Minute 2 may not move beyond the start of 1 below 2557.46. At this stage now it looks like we have what looks like a 5-wave structure down, possibly complete at Tuesday's low. That tells us one important thing. It tells us there has been a trend change at this last high, but it doesn't tell us what the magnitude is of this trend change. Now this is my first hourly chart because it's one of my sayings that we should always assume the trend remains the same until proven otherwise. If we continue to do that, and this is a bull market, if we continue to assume that the trend remains up until price tells us it's not, then we should be using corrections and pullbacks as opportunities to join the upward trend. If we approach our trading in a bull market in that logical and methodical way, then we will be right every single time except for the last time. So we should have winning trade after winning trade until finally the trend is over and then we have a losing trade. It's not possible to only have winning trades. Losses must be accepted, and because they are inevitable, risk must be managed. And that's the other reason why I also keep saying risk management is so important. And I keep telling members invest only 1 to 5% of equity for any one trade in your account, and always trade with stops. If we've got a 5 complete down here, then we've had a trend change, and the 5 down should be followed by a 3 up, which can't move beyond the start of the 5 down above 2665.19. I have labelled minuet wave A complete over here, but when I look at this structure here on the 5-minute chart, it could be complete, but there just isn't enough upward movement at the end of Tuesday's session to give us any price indication that downward movement is over. The 5th wave within this little downward wave most certainly could continue lower for another day or so even. And so we should use the small, narrow, yellow best fit channel as a guide to tell us when the 5 down is complete and the next 3 up has begun. When we see price break above the upper edge of this little yellow best fit channel, then take that as confirmation that this 5 down is over, and a 3 up to follow it should then have begun. When that's done, I'll expect another 5 down. Now for this wave count, that could be minute wave 2 in its entirety. Second waves are very commonly zigzag, subdividing 5, 3, 5. But if we move the degree of labelling within this impulse all up 1 degree, then now we could be looking at an intermediate degree trend change, and we could be looking at the very, very early stages of a multi-week pullback or big choppy sideways consolidation. Remember, intermediate 2 lasted 11 weeks, and so intermediate 4 should be expected to be reasonably in proportion to that. So we'll look out for maybe a Fibonacci 8 weeks at its quickest, but probably maybe a Fibonacci 13 or possibly even 21 weeks. There are more than 23 possible corrective structures that 4th waves can take. They really are particularly difficult to analyse and nightmares to trade. But for the first instance, we should be probably looking at a 5 down, a bigger 5 down at the hourly chart level, and this would only be the first wave of that 5 down. This is too short a wave to be a 5 down to start a new intermediate degree trend. So this would be 1, and then we'd be looking at a bounce for 2, and 3, 4, 5 to make a 5 down. Now that could be minor wave A. If intermediate wave 4 is going to be a zigzag, it could also be minute wave A if minor A is going to be a 3 and intermediate 4 is going to be a flat combination or triangle. Lots of different options for this. For the short term though, if we've got a little 5 down, then we'd be looking for a 3 up, which can't move beyond its start, above 2665.19. So for the short term, both wave counts are expecting the same movement next. And this is the price point which very clearly and strongly differentiates them. If we see a new low below 2557.46 by any amount at any time frame, the first hourly chart would be firmly invalidated, and then we should have some reasonable confidence that price should be in a big multi-week pullback or consolidation. In Elliott Wave terms, an intermediate degree fourth wave. Let's have a look at some classic analysis and see how much support or lack thereof there is for that idea. And I'm not going to go over the weekly chart. Well, I will very quickly just point out one thing. And I did this in the end of week video for members a few days ago. I will point out that we do have a little bit of divergence between price. The last couple of highs, swing highs here at the weekly chart level, is diverging between price and on-balance volume. That indicates some weakness in price, and that's the kind of divergence you'd expect to see approaching an intermediate degree correction. There was divergence between price and RSI, but it's just disappeared, and this nicely illustrates the problem with divergence. Sometimes it just disappears. ADX has been extreme for quite a long time. That tells us that something big is brewing, but it isn't a very good timing tool. Let's have a look at the daily chart. One of the better timing tools that I have found is on balance volume, and using that with trend lines. And here we have a bearish signal 2 days ago from on balance volume, breaking below the support line. The support line's been tested at least 3 times, and maybe you could consider this another test, so possibly 4. It's almost horizontal and it's reasonably long held, and so it does offer some reasonable technical significance, which means this is a reasonable bearish signal. Now, it doesn't tell us what degree or what magnitude of change we have had. It doesn't tell us. It's a bearish signal, but it doesn't tell us how far price may fall or how long it may take to fall. But it does tend to offer just a little bit more support for that alternate hourly Elliott Wave count. It offers a little bit of support that we may now be in a larger pullback or consolidation. ADX is now declining, telling us we may have a possible change from upward to a consolidation. We've got a couple of long upper wicks in the last 2 daily candlesticks with downward movement. Price, though, for Tuesday mostly fell of its own weight. Now, we don't have to see downward movement having support from volume in order to be fairly bearish, particularly in the start of a bearish movement. We can see this happen. Its volume support is more necessary for upward movement from price than downward, but this is slightly bullish. ATR is showing some increase. It does tend to do that when the S&P has downward movements. It tends to be more volatile and price moves in a larger range when that happens, but it's been doing that for a little while. Possibly this is something brewing. Maybe we are getting into intermediate wave 4 here. We do have double divergence between RSI and price and stochastics and price, while they are extreme overbought, and that also offers some support to the idea that we're having a reasonable degree trend change here. MACD still bullish. It is a lagging indicator. Bollinger Band starting to show some expansion. It looks like some volatility and range is now returning to this market. What about inverted VIX and the AD line? Inverted VIX has been doing some odd things lately. We had these 3 bearish signals here, and now we've got a couple of days of, well, this was technically an upward day, but we did have quite a lot of downward movement at the end of the day, and now we've got another downward day. This downward day, however, has not come with a normal decline in inverted VIX. It's come with an increase in inverted VIX. What that tells us is while price has moved lower, volatility has not shown a corresponding increase, which it normally would. It's shown a decline. So that tells us that there's some weakness today within price. So I am interpreting this as bullish, because I don't think VIX is a leading indicator. I think it's a lagging indicator. But what about the AD line? The AD line disagrees, and I would rather go with this one. I think it's a little bit more reliable than inverted VIX, particularly at the moment. Today we had a fall in price, and market breadth has declined reasonably. Now, yesterday we had a rise in price overall, but we had quite a strong downward movement at the end of the session. Yesterday the rise in price was supported by a slight rise in breadth. Today the fall in price has good support from falling market breadth. I am interpreting this as bearish. The fall in price has support from a decline in market breadth. That's normal. And so that, in conjunction with RSI stochastics and on-balance volume, leads me to believe that we're probably going to see more downward movement, and it looks a little bit more likely today than yesterday that we could be seeing the start here of intermediate wave 4, but we really do need to see price confirm that for us with a new low below 2557.46. That's all from me, and I hope that all of our members are looking forward to a fabulous Christmas, and you all have your Christmas trees up now.